Yo, what's up everyone? It's your boy Looney back with another breakdown. Let's talk about a big question on everyone's mind. Why does the market feel so overvalued in 2025? Before we get into it, quick shout out to my Discord community. I have a free Discord for anyone to join, and then I have a paid version with more perks. I have more team members. There is a course, there's trade alerts, and all the links will be in the description. Check them out. But let's get into it. First off, let's look at valuations. Let's look at the S&P 500. And I actually invest in this. I do, right now it's paused, but I was doing $5 a day. I'm thinking about getting back into it, but not right now. But what I want to look at is the PE ratio. Let me go down to that information. It is right here. It is actually above average. It's at 28 PE. And this is above historical averages. And tech stocks in particular were sky high recently. And companies like NVIDIA have been riding that AI wave. But with challengers like DeepSeek emerging, some of these valuations were at risk. And that's why they actually were negatively affected. You can see NVIDIA is actually climbing back up to where it was, but it dropped significantly, dropping 7 or 8% in the past week. And tech and growth sectors are leading the charge, but there is some concern that we're pricing in too much optimism. And that's why there was a little bit, what I feel is a healthy setback. And it's a little bit more affordable to get into these entries. So now you can invest in NVIDIA at a cheaper price. So it's a great time to start. So what is happening next? Historically, markets don't stay overvalued forever, which we just saw, and a correction or even a mild pullback could be on the horizon. Even another pullback can be on the horizon. I don't know. I'm just simply buying. You can see there's a little bit of a healthy return in the market and crypto. But obviously, in the past week, I am down 4%. Past month, I am still up 3%. But on the other hand, there is earnings season. So you could expose weak fundamentals in companies that are priced for perfection, but you could also have some good companies. You could see SoFi had good earnings, but because of the pullback and the IV crush, it dropped. But it's pulling back up. I mean, I only lost $12 on the day for theta decay, which is actually not bad. I do see SoFi growing to all-time highs this year. And here's how I'm managing my risk. One is diversify. Always be investing. Always diversify. And you don't want to be over-diversified because if you pick good companies, then that's it. You don't need to overcomplicate things. I'm a little too over-diversified. I'm actually looking to exit a few trades or a few positions. But having a little bit of diversity is healthy because on the long term, not everything is just going to keep going up all the time. So while tech might feel a little overvalued, sectors like energy might be something to look at. Utilities still offer decent value and stabilities. And not only that, I actually invest in a lot of Chinese companies because of this. Most of mine are in US-based companies, but I do have some kind of what I feel is a hedge and invest in China companies because they're a direct competitor. So I put in a very small amount, less than 2%, and I put a pause on this. But again, I'm dollar cost averaging $2 a day. And it's good to diversify not only companies, but sectors. And you can also diversify with options and crypto. So always diversify. Diversification is very key in staying strong in these kind of markets or pullbacks. Number 2 is to sell options. I am running covered calls, which are heavily protecting me. On the day I was down, let's just take a look how I was doing. On the day I was down 340 on stocks, and then let's go back to just stocks. I was down. I was actually up. I was pretty even. So it's pretty interesting that I had such a red day on crypto, 340. If we net, it's around 300. And then because of my options, I was up 140 because of these covered calls. And these hedge against volatility, but they also have steady income. I'm generating weekly income so I could sell more options. So although it doesn't seem like a lot, I am collecting $14 on the week. And if I do this on a long term, it adds up and you don't realize it. And especially I'm doing it across several different positions, and my buying power is at 780 or 790. I'm just about ready to go into another contract. And I'm not too sure what I want to do. I was looking at Riot because it pulled back so much and it's a little bit more affordable. But I go over that in my Discord, and another quick little plug for that. Number 3 is to just stay patient. Yes, dollar cost averaging into undervalued sectors ensures I'm not chasing hype, but also this happens. This is a very normal scenario. This is not out of the blue. Yes, it's not good to see things go down, but they do. Pullbacks happen. And fortunately, this one wasn't as bad as the other ones. There was a massive pullback in August, which actually was completely forgotten about because of how much the market was running. And that's probably why it was a little overvalued and there was a little bit of a burst. So let me know what you guys think. Is the market overvalued? I think some sectors are, but there's still opportunity if you know where to look. Let me know in the comments. Are you cautious or bullish this year? Don't forget to like, subscribe, and join my Discord community for live updates and strategies. Let's crush 2025 together. Peace.